Hey guys, welcome back to another week of my fundamental analysis. I have changed things up a little bit, in the sense yet again, I am just sticking to gold and oil trading. I realized I was making a lot of trades with a lot of pairs, and we're just gonna really get to know oil and gold, swing trade these two pairs. If we want to add a bit more later on, we'll see how it goes, but the main aim of the game is to get really used to oil and gold, how they move, their fundamental data, and really getting specific with it, because less is more. I know I am chopping and changing quite a bit, but I do think this is for the better, and let's see how this, the aim of the game is for the rest of the year to just trade oil and gold, and let's not change a thing. So 3rd of June to the 9th of June, this is my analysis. Last week was this week we had, so again, most of it we probably won't use, like, euro and yen pairs gaining momentum, we're not going to use. We've skipped the indices. The biggest one is we're bearish on oil. We are still bullish on gold and silver. And we have a bearish change in the 10-year bond as well. So, biggest thing I see is oil. In terms of from a data point of view, now we just focus strictly on USD and pair it with gold and oil. This week's changes, we had services, manufacturing, PMI that were better on services, worse on manufacturing, so they can cancel each other out. I wouldn't say any bias change for that. Employment change was positive, so we had an increase in employment change, but we had a decrease in job openings, we had a decrease in unemployment. Sorry, we had an increase in unemployment, we had an increase in unemployment claims. So, in terms of a picture we're painting here, and we also had an increase in USD earnings. So what we can see is, thinking about this data, we have the PMIs, we can forget about this, sort of cross each other off. It's very, there's no real bias given for that one. The employment being higher and the average hourly earnings being higher has that element of inflation compared with limited job openings, higher unemployment rate and claims, slowing down that growth. So we still are in the concept of stagflation. Inflation being I guess when it's stagnant growth, inflated market, still got that stagflation concept for gold. Even though my score itself isn't that high, 2 out of 0, we still are very bullish on gold, and we are bearish on oil, in the sense that, an increase in unemployment obviously not reflecting growth in the US economy, and if the US economy isn't growing, they're not using as much oil for production, things like that, and manufacturing's down, so more pertaining to oil. So we are bullish gold, bearish oil, and this was the week's data. So you can see PMIs, job openings lower, we have the hourly rate being higher, so net negative on US dollar, economy, and net negative on the US dollar and economy, but a net increase in inflation is my take from this week's data. Next week data, we have CPI, we have Fed rates, we can see if inflation's still high, still sticky. We have PPI as well, unemployment claims, so a very big week next week. Take home, I'm still with the stagflation concept, which is supported by gold and oil COT data. Both pairs have valid setups. Yep, so we're going bullish gold, bearish oil, and I'm gonna show you my trade. So I did get in a trade with gold last week, and we are in a trade with gold again this week. So last week was the 6th of the 4th. This one would be, I'll just pop this in for now. So last week we had a win. It was 1.5R. We took a buy on this 4-hour support here. You can see a nice rejection wick up there. and we trailed it to this resistance, which it did try to push out, but it crashed in. So nice 1.5R there, which is taken there. We got in again. Okay, we got in again with gold, and we got in with a 4-hour it's a daily and 4-hour support. So there, got that support area there. But you can see price didn't just crash all the way down, it did have a little pause. So we got in. We will see if this holds up or not. Not saying it will, but we'll just have to track along, see if this holds up. Okay, if it can hold up, go to break even from here, 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 and trail it. So that is our setup for gold. For oil, look, oil we can potentially take a trade. What I might do is I'll pop a alert here. If it triggers my alert and it doesn't break through, so what I'm hoping for is this, take liquidity Asia and go down. If it does that, I will definitely get in for a nice little trade on oil, but we'll see. So like I said, guys, we are sticking with oil and gold. We are going to be very specific on oil and gold for the rest of the year, see how our trading goes, see what sort of percentage gains we make, and if I can prove to myself I am profitable on oil and gold for the rest of the year, we are going to start to actually trade proper on this account, but we'll see, so stay tuned.